Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, July 17th, 2016. I hope you guys are having a fantastic weekend. And just a reminder, there will be no morning notes tomorrow morning. I'll be back probably later afternoon, maybe early, late morning, but I won't be back in time to get the morning notes out. So Friday, really a nothing day, and there's not a whole lot to really go over. I still believe that this is what is pending right here. That's going to happen here. And we are in, if you just notice the colors here, we have like the purple, and then this is the red where we chop around a little bit and then head down. So you can see it's a very similar pattern. We're up here. So now what would make sense is we get some type of dip and then come back up, test the highs again, and then make that big move down. All this should be taking place probably within the next 5 to 7 days, if not sooner than that. And what I mean is, it's gonna happen fast. So it's not going to be a 3-4 week process here. This is going to be something where we come down, up, and then down. And I think that within the next 2 to 3 weeks, maybe let's say 2 to 4 weeks. We're going to be embarking on one of these moves, and it's going to catch everyone by surprise. And we can tell just from some of the sentiment readings that I've been getting, they're absolutely enormous. Everybody and their mother is bullish right now. We have bearish divergences on the daily chart here. And you can see momentum is, for the MACD, it's not all the way up to the to major levels, but it's getting there pretty quick. But you can see our momentum here is there. So it's to me, we're on borrowed time right now, and like I said, it may not be ready for this, but I do believe it's ready for some chopping and then up again. And this move right here that I'm anticipating, if we do head down and up, that is going to be what even lures in even more bulls for the bigger move, because everyone's going to believe that this is the breakout here again, and jump in, and they're going to be buying in all the dips until they capitulate and we make some type of bottom. So again, this is really what I'm looking for, what I believe is going to be playing out, within the next 2 to 4 weeks. So this is the inverted head and shoulders that I said. It's going to trap a lot of people when it breaks out, because people are going to use the measurement of this, which is 2120 all the way down to 1995, so about 130 points, but that would be above here. So we're talking a move that the pattern for this right here would be all the way near 2250. Now the problem is that it's happening at the top of the chart. These are our previous highs. So this pattern right here is a bottoming pattern. That happens at the bottom here. And this is what actually creates very good patterns to make a bottom. But when it happens up at the top here, what happens is that everyone buys in for the target at 2250. But what happens is that it makes an expanded top, and then it traps a lot of people, and then the next move comes down here. So this is, even when we had this first move right here and we started pulling back, this is the exact pattern that I anticipated was going to be playing out. And, sure enough, this is exactly where we are. So nothing, the expectations of lower is still there. And I think it's going to come in a really quick manner. Now, let's just look for confirmation part. I would say confirmation, hang on one second, is going to be, I'm just trying to get this line. Okay. It's going to be when we break through, anywhere from the 2013 up to the 2025. So this really area right here, if the bears can push, once we see the S&P go below like these levels right here, that's probably going to be your confirmation that the move down to the 1950, if not lower than that, is playing out, because the pattern on this actually calls for heck, we have to wait for it to see when it gets here, because what the pattern actually is you take whatever the top price is, subtract it by the lower price, and let's just say it's 250 points. You add 250 points to when it breaks the bottom of this pattern to get your target. So it's a very, very bearish pattern. I'm not really looking into that target of 1750. Would it make sense? Absolutely. Just because the recent strength would be that we just completed the wave 5 of a 5, and now we're retracing a huge piece of what we've done since the 2009 lows. But again, longer term, bigger issues, I'm really just concentrating on the next move, which I do believe is going to be coming, straight down anywhere from the 1950 to the 2000, somewhere in that range there. And that's really what I'm looking for right here. I'm sorry, I want to go back. So you can see we have bearish divergences on the 60-minute chart, very, very overbought. On the 15-minute chart here, bearish divergences. This is just another bearish pattern, this bearish rising wedge. This pattern is looking for a move down to 2029. That would be the base of this right here. So again, it's not, even though the market's been pretty resilient to the upside, but a majority of the points have come when the cash markets are sleeping. And we're seeing the technicals that are really starting to look tired, and every pattern that we're looking at is bearish. And we've seen this stuff happen before, and every single one of them has ended the same, and that's giving back every one of these points plus some on the downside in a very, very fast manner, and that's kind of what I'm anticipating right here. So short-term support, you have 2126. This is the 23% retracement. That's right in that area that I was saying, from the 2113 to the 2126. If we break that, then most likely you're going to see a very, very quick move down somewhere between the 2100 and the 2079. So this will be our first kind of clue that there's a breakdown. And really what we would just look at from this here would be a move down to 2100 or 2080. On a shorter term basis, just from this this move up here, you can see the support is 2046. We have price support and a 62% retracement at 2110. So this is going to be pretty important. The bull, you may find some buyers there. This may be the dip, and then we come back up again. But again, it's a little bit early to be able to tell that. So why don't we do this? Let's see what plays out tomorrow. I would really just use any the strength that we've been seeing, and you just pick and choose on where you want to take, build a short position. And really just, I think 1 month from now, people are going to be singing a very, very different song about these markets. So with that, enjoy the rest of your weekend, and I will talk to you on Tuesday.